Just over 4 minutes away, and listen, NVIDIA releases its quarterly numbers tomorrow. Don't get too excited. You got a while before that. But we are minutes away from a slew of other tech earnings reports. After the bell, we hear today from Box, Zoom, and Intuit. Tech overall has been a dominant player over the past year, but will these earnings determine where the sector goes from here? Joining me now, Cantor Chief Equity and Macro Strategist Eric Johnston. Eric, where are you on tech right now?
So we're quite bullish on tech. We actually think that tech is going to lead us higher. So for much of this year, there's been a negative correlation between the hyperscalers and those that sell to the hyperscalers, the AI infrastructure names. We think that correlation is actually going to turn positive, and they can actually both work higher together. There's been somewhat of an inflection point with the hyperscalers where they're starting to show the ROI, they're starting to speak towards the ROI on all the CapEx. Their margins are expanding, and the price of compute is going higher. So we think that group can work, and then the AI infrastructure names have really been de-risked by the market. That's been the negative momentum trade that's gone on, and their fundamentals are quite strong, where earnings estimates there are still ripping higher. So I think they can both work together, and that's going to be much of the market and really drive us higher.
The negative correlation between those that supply and sell to the hyperscalers, that, am I wrong, is that SMCI, Supermicro. They are pretty much at the very top of the S&P 500 today, second, I guess, behind Merck or Moderna. But give me a sense of why those are the names, and that's the area that you feel is something to really watch.
So they're really benefiting from this surge in CapEx. And if you look at the CapEx number in 2026, from the hyperscalers, you're talking about 750 billion, and that's likely to go to 1.2 trillion or higher in 2027. So this, the earnings growth that they're seeing this year, which has been pretty staggering, is going to continue into next year. And that's the semiconductor names, it's the neo clouds, it's anyone from a Caterpillar, anyone who's selling into that CapEx cycle is benefiting, and we see that continuing. The earnings estimate revisions, we think, have more to go.
What do you need to hear? What does the market need to hear from NVIDIA? The stock has not performed that great after earnings reports over the past several quarters.
It hasn't. The big concern is not necessarily what's happening now or what's going to happen in 2 quarters. The market's really questioning what does it look like in 1, 2, and 3 years from now. And this is not just for NVIDIA, but for all the semiconductors. Is there going to be some sort of a cliff down the road? And so I think addressing the longer term path and why that essentially is not going to happen, I think is key. And a lot of that is around the build out being not just what we're seeing now, but in other product areas, whether it be robotics or other technologies. And so I think that talking about that in conference call is key.
Eric Johnston of Cantor, thank you so much. Here we go. Lots of green on the screen today.